I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome to the show, Danielle.
Hello, Jim.
Nissan is bailing out Mitsubishi, paying the price for lying to consumers for the last 25 years about their mileage figures. Is this proof that corporate fraud doesn't pay?
No, it's paid very handsomely, don't you think? It has made a lot of people, executives and people that have been able to extract pay and bonuses and, share price escalation, everything has been very lucrative for some people. But I guess my complaint about all these practices, and you see them everywhere, it's been this whole era of extracting, shareholder share increases at every cost. So that means at the expense of fair and accurate accounting, at the expense of workers and rights, at the expense of any kind of environmental protection in many cases, at the expense of everything that really holds the entire economy together. So it's like a woodpecker. We've drilled all these holes into the fabric of the entity itself, and now it's really wobbly and having a hard time holding together. And you're getting all this upheaval and political discord and extreme parties, everything breaking out all over the world. So I'm really hopeful that, as in most things in human history, these things work in phases, and that the pendulum is going to now swing at least towards the middle for a while, away from this very extreme extractive policy. No doubt at some point we may end up too far the other way, but that also is part of human history. But we have a long way to go to get back to even sort of half-decent balance. And yeah, I guess the fundamental issue here is that trying to correct for these policies, trying to make corporations more accountable, requires this attachment of responsibility to the individuals behind the corporate veil. And I think unless and until we get much more effective at that, unless and until we find the political conviction or at least the mandates from the judiciary, anything we can to reinforce the rule of law and reestablish that nexus. And if we can do that, then I think we can sober up quickly and get the system on a more sustainable path.
You have a very interesting article on your blog about how robbing the working poor is costing the economy.
Well, of course, right? But sometimes you're busy in your own little world and you're not fully aware of all the different ways in which this has been happening. But this article was, how many fast food, first of all, there's been this overbuild of these sort of roadhousey style restaurants across the world and certainly across North America. This particular article was about Olive Garden, which is owned by I think it's Darden Restaurants, which is, of course, a large publicly traded corporation. And, but there's many examples of this where you go in and you have impossibly cheap meals, right? You think to yourself, my goodness, kids eat free, all you can eat pasta, all you can drink, for like $10 a family. And you think the math just doesn't add up. How is this possible? Well, in fact, the math doesn't add up. And the only way that these entities have been able to keep sort of in business has been through various creative accounting, taking on huge amounts of debt, which very often is then hidden somehow through, off-book accounting maneuvers, also by cutting the pay to the quick of the people that work there. And then this is sort of a new blow, which I hadn't heard of before, which is this paying, and this is what Darden Restaurants has been doing, is paying prepaid debit cards instead of paychecks to their workers. These are workers in the food industry who are also are already making less than $3 an hour in the U.S. So these are essentially the working poor. And they are now being paid in debit cards that require them to incur banking fees with every single transaction, including just using it for cash, to pay your utility bills, to, just get food. It's like this additional tax that's being levied, and the beneficiaries of that are the corporation who's getting some kind of a discount to the banking services that it's getting, and the banks who are taking off. The estimate is something like $1.75 per card per month. That was back in 2012. So this has been going on for a few years. And at the end of the day, all this does is push even more weight on the social services, which has to be funded through tax increases. So one way and another, we pay for this. We pay for this kind of maneuver through, having a weak economy where the middle class is being decimated and we can't, keep consumption going or keep sales going at the levels that people have been wanting them to be, because there's just not enough consumers capable of purchasing things. And second of all, it puts this huge burden back onto, as I say, the social network, because people are working, but they still need all this support through social services and various taxpayer-funded programs. And then ultimately, you just lead to the necessity of higher taxes. So it's taxes in all different ways on the rest of the economy to do what? To extract these profit margins out for, the faceless shareholder, we'll call them, and the executives that run it. So it's really just a very polarizing, making income inequality and, extreme rich and poor in society, and in the end, very short-sighted and completely undermining us in terms of our stability and strength.
Well, the government isn't very friendly to the working poor either. I asked Ujjal Dosanjh when he was the NDP Premier of BC why he didn't up the personal exemption for income tax, from $8,000 a year to Alberta's $25,000. He says, Jim, we can't do that. That would cost the government $3 billion a year. I said, so in fact, you're balancing your budget on the backs of the working poor. He walked away.
Well, I am not actually a bleeding heart. I believe that we all must pay a reasonable amount to contribute for the resources that we require in the economy. So I realize that you can't just give a bunch of stuff for free to people and expect them to appreciate or respect it. In most cases, this goes for whether people are poor, in the middle, or wealthy. There has to be an economic calculation done. There has to be a sharing of responsibility. And if that means that, the books at some point have to make some semblance of balance. Otherwise you end up with huge debt, which then comes full circle to, cause economic havoc again and extract cash flow to service debt and put us back further in the hole. So, I would have to look at the actual math, but I would say to you that the reality is that over the past, say, 20 years, this corporation has really become this entity with all the rights and privileges and very few of the responsibilities or liabilities. And it has become a monster in many ways. In its inception, corporation was meant to share risk, to shield individuals from, to define or limit liability so that the individuals would start up enterprises and take on risk without risk of being personally wiped out. But it has morphed into this cloak of corruption is basically what's happening, and it's this publicly traded corporation who gets all powerful, basically huge political sway, revolving doors to the regulators and government, and at the end of the day becomes, as I say, like a monster. Just sort of sucking up everything and contributing nothing, and sort of faceless, because the people that are committing the directing acts within the corporation are not held accountable. So it's that perfect storm we've created that we really do have to go in and dismantle the incentives that, first of all, I say we need to connect back to personal responsibility, because no corporation, we call it a legal entity in its own right, but no corporation makes any decision without the actors involved behind the scenes. So first of all, we have to go back and reconnect that piece so that there's no, you can't make a guilty plea, for example, on behalf of a corporation. You can't acknowledge a breaking of the law or a fine if you don't also have individuals who come forward. And the second thing is there has to be some actual ramification to a person in their working career for these choices that they make. Another interesting sort of sidebar to this, Jim, is Elizabeth Warren wrote a letter that she published on her blog or her Twitter today to Richard Ketchum, who is the chairman and CEO of FINRA, so the Financial Industry Regulatory Authority in the United States. And she points out that NIBR just did a study that found that 1 in 3 financial advisors working in the United States had misconduct-related disclosures on their working history, on their employment history. So in other words, have been breaking either full-out embezzlement, forgery, extortion, fraud, that sort of thing, and or investment-related regulations that they've broken. Well, not only is that's a very high number, 1 in 13, but the ramifications of it are almost nil. It turns out that only about half of these people who were in these infractions lost their jobs in the financial sector, and a full 44% of those who lost their jobs had another job with a different advisory firm within the year. And it turns out that some firms are notoriously known, and these are large broker-dealers, for turning a blind eye and bringing those people in, getting them back into the business of pumping out commission. So, until there's any sort of professional standard that, if you've broken certain laws that in a trust-based industry, you shouldn't be allowed to go back to working in a trust-based industry, like finance, as an example. We're not saying you have to be put to death, but there's certain jobs where it's like if you've been, committed some kind of inappropriate activity with children, you shouldn't be allowed to then go back and work in positions of trust and power over children. It's the same thing with financial issues. So, those type of things. So Elizabeth Warren wrote this letter to FINRA and said specifically, what are you going to do to address this completely unacceptable levels of, there's no responsibility or ramification in most cases for this brazen misconduct, which PS is bankrupting people. Like the pensions, the funds that are required for future needs for spending are being gutted all over the world because of this runaway industry hiding behind corporations and not taking any professional accountability for their actions.
We'll have more with Danielle Park right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Danielle Park. Danielle, you mentioned that maybe 1 in 3 shopping malls is in danger of closing. Can you explain why?
Well, this is a theme you and I have talked about in the past, right, Jim? But it's just sort of coming along like a train down the track, and it's the aftermath of the credit bubble, of the incredible amount of consumer debt that was taken on in the past 15 years to drive demand for cheap goods from various places like China. And what's happened is that now that bubble has burst, both because people are getting older and have less appetite for taking on more debt, and because people have poor wage growth and therefore can only service the debt levels they've got and have a hard time purchasing more things. So you've got debt and demographics driving down demand in the world, and all of a sudden, as this credit recedes out of the retail sector, you realize it's been garishly overbuilt in the past, like I say, about 10 years. So this is certainly in most areas. You drive across North America and you'll see that most cities look the same. Most suburbs look the same. They have a very similar array of these mini malls with the same anchor tenants and the same sort of, so you had a rapid rollout of different franchises and, cheap outlets and high-end, frankly, all sorts across the whole world, but in North America in this case. And as the retail sector loses this consumption in it because credit's receding, you're left with, it's almost like a wrecking yard of superfluous inventory and real estate. And the thing why this matters is, lots of green space was bulldozed under to pave and create these mega malls in places where they thought the consumer would have insatiable demand, but they're not able to pay their rents in many cases, so they're having to go back and try and renegotiate. And again, another thing that's happened in the past 5 years is that they were able to keep it alive a little longer because of the QE and free money flowing around the world and ultra low rates. A lot of these franchises borrowed more money to try and hang on a little longer. So there's a whole bunch of now investment that is at risk because, bonds were issued, credit was extended by banks, real estate investment trusts went wholeheartedly into this area because the investor sector was looking for yield. And so you've got everyone sort of now contaminated by the reality that this is massively overbuilt in the world. And so the answer is that they're going to have to, renegotiate many leases and, otherwise you're going to lose all your anchor tenants and then you're going to be left with a whole array of empty buildings. But the whole push towards bricks and mortar is where everyone's getting much more efficient, realizing, gee, other than flagship stores that attract, almost like a recreational attraction of tourists in some areas, like a Macy's downtown, although Macy's results were awful today, Macy's in New York City. There's certain sort of places that people will go as a tourist attraction, but if you're talking about shopping, you've now got to get a lot more lean and a lot of consolidation in this massively bloated sector. So as I say, it matters to investors because so many funds and managers and ETFs and all these things have really gobbled up shares in these conglomerates and companies and sectors in the past 5 years of low rates. And so, as I say, reaching for yield at the expense of capital is never a good idea. And I think that's what's going to happen here, where the prices come down significantly and people will find that they really overpaid for that income they thought they were getting.
Well, look at how many companies now are borrowing money to pay dividends.
Well, that's the other thing. That's the trying to placate, quote, investors. The companies were trying to, just keep the game going. So they were doing everything in their power to maintain the facade and the appearance of prosperity and that their business was ever growing and, all these insatiable, silly targets that are given as if there's no business cycle, as if there's no, end to the debt that any one company or household can take on. And none of that is true. It's all a very finite, ability to expand and to add on debt. And we hit that wall. We hit that wall actually a few years ago, but it's been these tricks and maneuvers which have kept it going. And as I've said many times, it has done no one any favors because if you're in this business, if you're in the retail sector, you have overbuilt and taken on more leases and expenses than you should have because you were hoping that demand was bouncing back any moment. And so because you could borrow money and get cheap financing for a while, you didn't make hard decisions perhaps 5 years ago, but you were able to extend it further. Well, now everything's just that much more indebted and unsustainable. So ultimately these things correct. And I just think this time it's going to be particularly large.
Well, in Vancouver, after people have paid their mortgage, they're $3,000 a year in the hole.
Yes, I saw that. And did you see that ABC Australia did a piece last week on their home realty market? And it was pretty much, it was very similar to some of the stories in factors we've seen at work in hot spots like Vancouver, and just how, insanely, again, overpriced this stuff is, and the only reason that it's been able to do that or can keep that gig going is because you have money basically fleeing places like China, which is in the midst of a full-blown credit crisis right now. And I think, as money is just desperate to get out of that banking system and go anywhere, it's driven up these prices in areas like Vancouver to, ridiculous levels. And then at some point that flow finally stops or slows, and then you look around and realize that you've created this enormously distorted market, and it's very dangerous for people who aren't aware that, their asset value can crash in value, and they've got this debt that it'll just sit there.
Danielle, I know you have to run. Thank you very much for chatting with us.
Thanks, Jim. One of these days, we're going to have more positive stories to talk about. I think wonderful opportunities are in the works. I think that the market is finally making the progress towards mean reversion. It's been halted a few times in the past few years with QE and all this mania that's gone on. But, the truth gets out in the end, and I think that we're moving finally in the right direction. We've exhausted all the wrong ideas and policies, so I'm actually hopeful that we're moving as I said, the pendulum swinging back more to the middle. So I don't want to give anyone the impression that I think it's hopeless or that we're permanently stuck in this state of stupidity. I really don't think that's the case, and I'm quite hopeful that, when things can't get a lot worse, they can only get better, and I think that's kind of where we're heading in the next bit.
Thanks again.
Okay, Jim. Bye.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward questions or comments to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.